Good day, all. Ira Epstein of Linn and Associates with your metals market update, and this update is for Monday, and we are at the 24th of August, 2020, about 6:45 at night. I'm going to be late all week. We're redoing parts of our home, as so many people are, and if you can imagine, I'm juggling what I do, juggling that, my wife's out of town, I'm going crazy. Welcome to my world. But in the meantime, I will tell you what I'm noticing. And the guys that are actually doing my construction all trade. It's hard to believe. We were just talking, one of them, he's going short one of the ETFs. I'm laughing here because everybody I know seems to trade. But to make a long story short, I'm not seeing an awful lot except that the stock market continues to just do one thing, and that is rally. You've got the metals in a churn and burn. That's what they're doing. You think they're starting up, they don't go. You think they're going down to fall apart again, they're not going. I had said that I thought the uptrend ended in Dees Gold to my traders at 1938.90. It's gone nowhere. We've had attempts into the 1950s, attempts down to the 1910 area. You haven't left this basic number. I don't see silver anywhere. Copper is still the bull market. The dollar index is all over the board. At first we thought the market was going to today hold a big break. Well, it came back and it put pressure back on the euro. So let's go to these markets and get a feel. And remember, we have this week an important event for gold and the currencies. We have the Jackson Hole Symposium on Thursday. Each night this week we have the Republican National Convention, but understand that's going to be no more than the Democrat. It didn't move the market for theirs. It's not going to move the market for the Republicans. What is going to move the market is GDP numbers this week. The fact we're going to hear central bankers from all over the world virtually speaking. What are they doing? I imagine we can get into all those, so I got to find out more about it because I love listening to it. In any case, for the week, and it's only Monday, we're down $2.40 right now. When we take a look at a daily chart, you can see how the market, and I had been pointing this out to you last week and the week before that. We have a trade top and a trade bottom. We seem to be caught in the center of it. And people will ask me, and it happens inevitably, be it on YouTube, they'll write me, Ira, what do you think right here? And I'll go, I think it's churning. And that's still what I think. Now, what you have to pay attention to each day, of course, is the fact that science along with industry have come together, and today we're hearing how there's now a new product you can put in airplanes that supposedly keep surfaces clean for up to 7 days. Don't know enough about it to tell you, number one, if it works or not. Then I'm hearing more about the UV lights. I'm hearing how they're working on time elements of cleaning airplanes out. Why am I talking planes? Do you think a movie theater is that much different? Do you think a restaurant is that much different than those two? These are the environments that are going to matter. None of these are treatments. But as this happens, the stock market techs keep going. It's not a broad-based rally in stocks at all. That's putting pressure on the gold market, and it doesn't help gold to see the dollar coming up a bit too. But when I look at the gold on the swing line, we have a higher high and a lower low. That is not a trend. Assuming that today's low is taken out and that low is 1930.80, you would have immediately a pattern of a lower high and you already have the lower low. In fact, just not taking out 1970.30 will turn that number down. But it can also turn up the day after, but we'll get to that in a minute. Where's the market in terms of bias? The bias is down since prices are under the 18-day average of closes. In fact, in looking back, the market laid a trap for the bulls by getting right here these 2 days over that number, saying, we're breaking out. And as fast as that happened, this day, and I have to tell you, that was Wednesday of, the 19th. I know I felt miserable because I was trying to have my clients try to build small units, not the big size metals, see if they could build something that would last. No, it didn't come about, and it's still not there at this point. When I take a look at Bollinger Bands, the first challenge of 1904, wherever that Bollinger Band is, I do not think the market's just going to go through it and running. It could, but I don't think so. If it did, then this low back here of 1813.80 would be hit. That's already some $200 from the highs gold just made, if it occurred. Momentum-wise, when I look at this, I'm looking at a market that is still not in oversold condition. So I have the bias down, I have momentum down, I am not trending. I don't see a thing in that market. The gold-silver ratio is maintaining a good posture for silver strength versus gold, which tells me this base move in metals is not over. Yes, you're getting corrections, but if they can get factories going, if they can get other parts of the economy going, you don't think there's going to be for demand for copper, platinum, palladium, and all those things? I certainly do, but when we look at the chart, we're not at that point. We're at the point where, just like gold, you peaked out and now you're pulling back and you've entered a short-term downtrend. You've got lower highs, lower lows. Agreed? The market's under the 18-day average, momentum pointing down. I say the bears are pressing the case against the 2702 area. The dollar risk is insane. It's all the way back up to 2778, one tick over that number. That's an awful big risk. Sometimes the risk tells you the trade isn't there. That's exactly what I think right here. In the copper market, it's probably time for us to get rid of this and start moving to the Dees copper. But all I'm looking for is a challenge of the 18-day average. Where has the market failed? I pointed this out last week. The challenges of the Bollinger Band went nowhere. On the down, they went absolutely nowhere on the upside. And where are we pulling back? That line in the sand. This market is basically not trying to give you any follow-through one way or the other. It comes down, you think it's going to break out, it doesn't. You think it's going to break out, it doesn't, and it just goes back in the center. Now, admittedly, the center of this is a trading vehicle. Normally, if you're tight, you don't have a range of some 21 cents, and that's what you've basically got. So I think traders are able to play that to a degree, but I wouldn't be playing for home runs down here or home runs to the top side just yet. In the platinum market, the pattern is one of a higher high and a lower low. This is not a high yet. We haven't taken out yesterday's low. We don't know where the swing line is. What else? Oversold. I have an oversold market with downside bias that has not got a trend. I wait. What about last in the metals, the December, and I moved here to Dees, the palladium. Do you not see that this market every day practically is hitting that red line, the 18-day average? And as it's done so, it keeps getting a smaller range, bringing in the Bollinger Bands, which means you're entering a pipe. You're just spinning, and traders that are going, it's going down, it doesn't go. They think it's going up, it doesn't last. It comes back on them. This is called bad time trading. And there is a point where you put your hand in your pocket and you go, I'm waiting for this market to give me my signals, or the signals aren't making any sense in terms of dollar risk, no trend, bias not going with momentum. So that's basically where I'm at there. In the dollar index, I didn't want to leave this. I see this sideways action forming. I see that the market now has a pattern of higher lows, yet an outside day up today, and a higher high. So until you take out 92.56.5, who grabbed control? The bulls. You now have momentum pointing up. You have the market over the 18-day average. I admit I'm not looking for much of a play here. If this market rallied another 50 points, I'd be surprised. Do I want my clientele to have a recommendation from me in front of the symposium of Jackson Hole? You can count I don't. So I already know I want to avoid things like that. So I've got my hands in my pocket right now. Nothing wrong with that. You read the game, you say, okay, if I'm going to trade anything, I want to be in the stock indices. What do I want to be? Until it proves itself different, I want to be a buyer. I want to learn about things like this if you haven't. These ideas. You know, I talk about slow stochastics. What do you think relative strength is? Just another measure of momentum. Money flow index, do you know what it is? You should learn a lot of these things. So how do you work with that? How do you optimize stops? You think I don't optimize stops? I use swing lines and I optimize with momentum. You hear me say that if you have an embedded reading all the time. The article's pretty good looking. I mean, in depth all the way through. You learn from this and you understand that the basics are the basics. You can build on it. How do you get any of this? You go to our website, www.iraepstein.com. It's that simple. You're going to see free offers on the bottom right. Go in there, choose what you want, we'll get them right out to you. I'm Ira. You have a good day.